Good morning, ladies and gentlemen. Today is March 17th, 2021, and I'm back with another edition of the Wednesday live show. And we're going to take a look at the markets and open trades and see what's going on. Today is Fed Day, of course. Today's the day that Jay Powell is going to, well, the Fed's going to announce, obviously, no change in interest rates, right? And Jay Powell's going to come out and give a speech, and then he's going to answer questions and answers this afternoon. And from what I've been reading, it's a very important Fed meeting, and people are split on whether he's going to be dovish or hawkish or whatever, but the market is kind of, well, some of the market, very, very bifurcated market, I guess is that the term I should use. But, the market's kind of throwing a hissy fit under the surface anyway because interest rates are rising. Short-term interest rates are rising, and, the narrative goes that that's bad for tech stocks and growth stocks. And so we've been seeing this weird sort of environment where, just like back in the dot-com days, for those of you that were around back then, we've been seeing this weird market where the Dow is strong, and old school stocks are strong, and tech stocks and growth stocks, the market darlings of recent history, have been getting whacked. And so it's like really tough to talk about the market. Like this morning, again, the Dow's up and the Nasdaq's down, right? And I remember back in the dot-com days, like towards the very end there, I guess it was in 2000, 21 years ago, when we started having, the same sort of price action where you'd get, these big rallies in the Nasdaq and the Dow would go down, and vice versa. And so whether that's any indication of trouble remains to be seen, I suppose. But the funny thing, so I've got the ETF for the Dow up here, and you can see this latest run obviously has pushed it right up to a new high. And yeah, I got some trend lines drawn on here. I've drawn all kinds of stuff actually. I don't have this on some of the other charts, so I thought I'd scroll back and look at it. Here's a trend line I've seen some people draw from the lows, the pandemic lows, up through, that low and up there. So big support area. And then, of course, all the charts kind of have a more recent trend line drawn across the lows. And you can see there were a couple of forays below it. But, one thing I've noticed, and this is more pronounced on the S&P, is that this rising trend line, the market tends to get extended from it and then revert back to it. But as you can see, the Dow's right up at the high here, but depending on what stocks you're looking at, it's a whole different story. So real quick, we'll look at the S&P too. Um, you can see the S&P, hit a record high again yesterday, and it's kind of interesting because there's all these record highs, and then it hits the highs, and then it likes to, a period of time goes by, and it likes to revert and kind of test this area of this trend line. So it remains to be seen here. And today's going to be sort of an outlier because it's a coin flip, right? When Powell is speaking and answering questions, the market is probably going to go nuts, and so hang on his every word. And so we could see a big rally, or we could see a significant drop. And of course, Friday is also options expiration day, right? And you've got end of the quarter. Since this is March here, we got a couple of more weeks, so a week and a half, and so you got options expiration. There's a lot of things in there. End of the quarter rebalancing, end of the first quarter, and all that good stuff. So there's a lot of cross currents, and the Dow and S&P right up at the highs, like everything's just fine. But flip over to the Qs, and it's a little bit different story here. So the Nasdaq 100, and the Nasdaq composite itself, which I can't pull up on these charts. But on a side note, I have actually switched over and signed up for stockcharts.com. And so I haven't officially like decided to move my show when I'm doing the show here. I haven't officially decided to switch over to the stock charts yet, but that'll be coming pretty soon. So these free stock charts, I've been using the freestockcharts.com basically since they came out, inception. I don't remember how many years ago that was. I know it's at least 5 or 6 years, and I find it real easy to be able to draw on them and mark everything up, and I can just blaze my way around these. And so, but there's a few drawbacks to the free stock charts. For one, it only runs in Internet Explorer, right? And so they're phasing it out essentially. Only runs in IE, which is the one browser that nobody ever even opens anymore. And so, but the stockcharts.com has something called now I forget what it is, like ACP or something like that, and it's sort of a high-tech version. So I've been getting used to that and pretty comfortable with it. The only thing I haven't done is started marking entries and exits and all that good stuff. So anyway, I'll probably switch over to that at some point here for the shows. And also it's in real time, whereas this is still delayed. So that's another drawback. The free stock charts, they used to be in real time, and I used to be able to pull up the S&P 500, the SPX. Can't do that anymore, so it was time to switch over. So I've been using the other ones for about a week now, and once I get familiar with them, maybe next week or the week after that, I'm gonna just switch over for the show. So anyway, you can see the cues here. What's interesting about this is how they rallied right back up into overhead resistance there, below this trend line. Now they were the life of the party here as far as the rally goes so far this year, from the end of last year into this year. And then, of course, the rising interest rates, which you can see on the TLT chart, is basically, the inverse of the treasuries or whatever. 20-year treasury bond fund. Well, I guess, yeah, it's not really the inverse. So the bonds go down and interest rates go up. And that's why the market's areas of the market, I should say, are sort of throwing a little bit of a hissy fit. And that's why the Fed meeting today is so important. So according to, the financial journalists and all the narratives and that. So, the funny thing is that I remember it was 2018, right? Back in, let's see if I go to, I don't know if I can get a weekly chart here. Yeah, well, sure. I think it was the beginning of 2018. Like the market was just on a tear, straight up back here. Zoom back a little bit. So yeah, market was just on a tear on 2017. It was actually 2017 was a pretty amazing year and got really sort of extended. And then I believe it was right at the beginning of the year, the thing that caused this pretty massive sell-off here, and basically, I guess it was February, was rising interest rates, right? That was the boogeyman back then. So we're in sort of a similar environment, and of course, there's been sell-offs after that based on different things. But anyhow, it's about the speed at which interest rates rise, right? So slowly rising interest rates, and then of course, everything's debatable because there's plenty of people that will point out that in history, the market's done well during periods of rising interest rates because that means the economy's doing good, right? So, and historically speaking, periods of time where interest rates were going up, that was because the economy was accelerating and this and that. So, yeah, it's just everything's a little kind of odd right now. Obviously, coming out of a the global pandemic, hopefully, and so GDP is like expectations are extremely high, and I mean everything's just sort of off the charts, and so it's going to be interesting. And of course, inflation is picking up. My goodness, commodities, the price of lumber and the price of all sorts of, just basically every commodity is pointing at much higher inflation, which typically forces the Fed to raise interest rates to slow things down. But the Fed has said that they're going to maintain lower rates and they're going to let the economy run hot, and they're trying to pretend that any inflation that there is or is going to be temporary. So they've kind of painted themselves into a corner, right? And so we're going to start hearing about this taper thing again. The last time I remember people talking about tapering was back when Ben Bernanke, I guess it was Bernanke, if I can recall that, with all the QE and the money printing during the financial crisis and all that, everybody was concerned. The market would literally gyrate based on, when it thought that the Fed was going to start tapering asset purchases. And so, everything comes full circle, and here we are. We're back there again, right? So, anyway, kind of a crazy market, and we've just had a handful of these trades get opened here. Now we had ExxonMobil just got closed, and let's take a look at that real quick. So ExxonMobil had been open for since the beginning of February. Finally, that stop got really tight up here, and finally got taken out. And so that worked out pretty well, right? Um, Energy was on a tear there for a little bit, and as you can see, it's kind of acting like it wants to give a little bit back. But anyway, we've got and this MOH has been open for a long time too, as you can see, since around the beginning of, well, middle of February, I guess. So that one's been open for over a month, but these other ones have all sort of just triggered in here, and and so it remains to be seen, how they're gonna do, because the environment for individual stocks has been kind of rough. So anyhow, we might as well just start at the top, and we'll just jam through and take a look at these open trades and see how they look here. Tesla, of course, is I talked about this last week, right? Went from 900 to 600 basically, actually below 600, but so there's a third of its value, and then it's bounced a little bit, and here we are, right? Triggered us in on this bounce. Occasionally when a stock sells off like super hard like this, and then it bounced really quick, right? So sold off like crazy, and then 2 days kind of snapped back, and so quite honestly, it would have been preferable perhaps to see it consolidate and base out, but they don't always do that. Sometimes they just have V bottoms, and so anyway, like this little consolidation here around 700 has triggered us in, and then of course there's some volatility here, but the good news on Tesla is that the initial stop is started off basically in the middle of this bar, somewhere around the middle of this bar, rather than like way down here. Now, quite honestly, I wouldn't expect these lows to get taken out unless the market really tanked. And so this is a relatively tight stop for this particular stock and the volatility and just the pattern in general. But it's probably, but it's either gonna like keep going from this consolidation here, or it's just going to come down and retest the area of the lows, in which case you wouldn't want to be holding it. But the system detected that there was enough forward momentum, right? And a lot of times you will see charts like this that sell off hard, And then the other thing is that it's got this little sort of inverse head and shoulders working here, right? Like there's the left shoulder and there's the head and there's the right shoulder that we're in right now. And so in theory, like a break above, say about 720, like right there. A move back over that will, sort of complete the inverse head and shoulders pattern. And then, so let's see, what's the target on Tesla here? 765. I might as well just move that up to, so there's the target right there. I hadn't marked that on here. Some of these ones that have opened just recently, I didn't put the target on yet, but as long as I drew that line, I might as well go ahead and add it to my chart. I might have to go back and recreate all of this in my new charting platform, which you'll see is really slick. It's pretty nice. The main drawback to it, or one of the main drawbacks to it, is that, and you can't really see this. You can't really see this in with what I'm doing here, but let me pull this down a little bit here. See, I've got all these tabs set up with different indicators and different indicators and different sort of layouts. Some are candlesticks, and my monthly chart is log scale and all that. with the free stock chart, or I'm sorry, with the stockcharts.com, I have to sort of manually go in and change some of that stuff on the fly. Like I can't have, or I don't have 10 different layouts all saved and configured and set up. So there's just like everything, when you switch platforms. And here's the other thing, like on my other computer, I've obviously got Thinkorswim, and boy, that would be extremely difficult to try and do all this stuff on Thinkorswim, just because it's so clunky with the menus, and it's a lot more difficult to mark up and edit charts and do this kind of stuff that I do on the show on the fly. So that's why I use these anyway. Well, and plus that, that's my trading computer, and so I don't really do anything over there except run the Thinkorswim, and that's about it. But anyway, so Tesla, so far so good, unless it decides to roll over and retest the lows. Excuse me. So we'll have to see about that. NTCT, similar sort of thing. This is a tech stock, but there's another one that kind of triggered in. I hate to use the word prematurely, because a lot of times, you'll get these V bottoms in the work, but ideally this one would have settled down a little bit closer to these lows, consolidated and then turned up. But one of the issues is that the trigger price, starts off like kind of way above the price, and then it slowly works its way down. And like always say, it's a function of price and time. And so, as time went by, the trigger was slowly working its way down. But sometimes you don't get that opportunity. Like look back over here, it sold off, and actually, back here was there's quite a bit of at least a few days of consolidation at the lows, right? And then it turned back up, and it never looked back, right? So that's just the market does what it's gonna do. But ideally, we would have gotten filled a little bit closer to that trend line break, maybe a couple days early. But the system is designed to wait for consolidation. So the good news is, I should say the positive aspect of this is that the initial stop started off on some of these patterns. It'll start off at the very low of the pattern, and on other patterns it'll start off like this, kind of well above the low. Basically it's kind of right at the trend line break here. And it's all calculated based on the ATR of the stock, and with the idea that not to get knocked, that it won't get out. We don't want the trade to get knocked out on normal price fluctuation of the stock, right? So tends to start off wide and then it'll tighten up, tighten up. So it's pretty tight right here. I mean, we're talking, it's a buck. It's a buck between the trigger and the trailing stop at this point. So you can see it ratcheted up really quick too. Um, this thing's only been open for a couple of days, and that trailing stop's already sort of ratcheted up to here. So not a whole lot of risk in that, and that's kind of the idea. You'll see that if you look at the closed trades, you'll see that there's only been probably one or two all year so far that have actually like just triggered in, rolled over, and hit the full stop. Right? So the idea is that that initial stop goes in, and then within, a couple of days, a lot of times it'll go ahead and ratchet up as long as we get a little price movement away from the trigger in our favor. So anyway, yeah, it doesn't look too bad. It's consolidating right here, and in the larger picture here, that's a pretty nice, it's a pretty nice little change of trend. It's just kind of crazy that it bottomed out, like this little pullback bottomed out on such a crazy price bar right there. It was a week ago Monday. So anyway, moving on. There was some news on like Plug Power this morning, something about accounting irregularities or something crazy like that, and so the stock's getting whacked, and that took this is obviously the same sort of a similar type of business. I think some of these EV stocks, they gap down, and look, they're going up, right? So that's kind of typical too. You get just like Tesla, right? Gap down, rally higher. So this one's kind of nice because in a way, because it broke the trend line. It had a return trip back here to basically the support. Now, I mean, this is one of those cases where the stock doubles and then loses half its value. So that's always kind of a weird situation. But at the same time, we're getting a decent little consolidation here, and so um, if the market, well, I shouldn't say the market, but if these type of um, new energy stocks, EV stocks, and the periphery gets a little buying pressure here, then this can easily bounce up fairly significantly, and so target on this is based on obviously the volatility and percentages in that. I mean, the target's just right here. So it wouldn't take much. Well, it won't take much to send this thing up here to the target. Little bit of follow through on this bounce that we're seeing, this consolidation. So the opening price action here is kind of encouraging when you get a gap down like that and then it rallies, but it's still real early, and of course this is delayed. That's right. So, but anyway, let me mark that target on here, and of course the target is. I mean, it seems really close, but percentage-wise, 26.50 to 29. That stop, this is an extremely volatile stock, obviously, and so that stop, percentage-wise, the initial stop, is pretty far away. But it's based on sort of these prior lows and of course the ATR. So we'll see what happens with this. It's extremely volatile stock, and it's going to trade along with the sector, of course. So this next one is kind of an odd one because typically we don't have lower price stocks on the list, but this one was on the pending list for a really long time. I think it started off like back here in February, and I was kind of had my fingers crossed that this would eventually trigger in, just because it's such a unusual stock for the system to choose, being a low, under $10 like this. I think, it was just under 10 when it hit the pending list. But anyway, and again, this one is, since it's low price, the percentage fluctuations are significant. And so this thing, my Thinkorswim is showing that it's up 5.3% right now. So it's actually at like 764 or whatever. And I mean, you can see by the scale over here that it's relatively volatile. So we'll see what happens with this. But quite frankly, that was a pretty nice long duration pullback there. You got a really nice pivot low right there. Of course, there's been some other pivot lows, but this particular pivot low, you got some follow through on the other side of it, right? And so, again, it's sort of this one. There's a lot of stocks out there that have sold off in recent weeks and or months have these sort of inverse head and shoulders patterns working. So here's another one: left shoulder, head, right shoulder, and so. The interesting thing is that we tend to get triggered in kind of before, if you would say that, oh, this is the neckline up here. I've noticed that we tend to get, or the system itself tends to get triggered in, tends to have the trigger price before like the neckline really gets broken. But that's good, because I mean, the closer you get in, the closer that we get triggered in to the low of the pattern, then the better off we are. And so like this initial stop is in a really good place, right? Because basically you can see that there was only a couple of days here that it was below that. So anyway, another gap down and rally here. So this could potentially be a significant winner. The target on this is 875, so I go ahead and move that up there. That looks about right. So, and you can see how easy it is to mark these charts up. And that's why I thought about using my new charting platform for today's show, but then I decided that it was probably I was probably better off not, because this is going to take a little extra time. So for one thing, I'll have to go back and recreate all the stops and targets and all that good stuff and the trailing stop. And so I was kind of hoping to do it when there was less open trades, make it simpler, but I wasn't sure if you guys wanted to watch me struggle to do that on my new charting platform. So I decided to go with the tried and true one, where it's simple for me to just draw anything on here on the fly. But there you go. So this one's got a lot of promise, and ideally, if this cycle to the upside, if momentum's changed here and we get followed through the upside, this could be significant percentage winner. And of course, there's also a significant, percentage risk between the trigger and the trailing stop when you're talking a low price stock like this. So we'll have to see. We'll keep an eye on it. So far, so good. So let's see here. Moving down the list, Ciena. Man, this one is just weird, but the market and stocks themselves, they have a mind of their own. They do what they're going to do, and so the system is just designed to play the numbers, and all it uses is open, high, low, close, and volume, really. Just like any just like the charts, right? I mean, that's all everything is derived from open, high, low, close, volume. Every indicator, every single thing. And so that's what the system is using, right? And, here's a case where the trigger was still I'm trying to figure out the right terminology here, but the trigger was still, sort of in its infancy here, way up here at 54, back over here. with the idea that, with the idea it was going to sort of migrate down over time. But this one particular day here, week ago, well, 2 weeks ago tomorrow. But anyway, that day kind of, I don't even know what that was about. I don't know if that was earnings or what it was, but that had an effect on everything because you had this crazy day down and then snapped right back up basically before the trigger had a chance to, a couple of more days down here in the high 40s, low around 50, 51. Couple more days, this trigger would have come down to here. But it just so happens that this thing had, just an incredible snapback. And what's even more incredible about it, because typically getting triggered in on a gap up, and a bar that looks like that is, you know, on the surface undesirable. The follow through has been extraordinary, right? And here's another case where the trailing stop basically moved up, within a day. So this is pretty amazing. I would have never, when we looked at this last week, I don't even remember what I said about it, quite honestly, but I mean, this is the idea. The stock's in a nice major uptrend. It has a pullback, and then the momentum sort of reverses course, and we look to jump in. This is anything but the ideal pattern. However, as we know, anything can happen in the market. So target on this, $56. It's already plowed through the target, right? So pretty amazing. I mean, basically within a day. So, and the other thing is that sometimes, us old school technical analysis guys, we like really well behaved chart patterns and chart patterns that look a certain way. And I always talk about like the ideal setup and all that. And it just goes to show that in this current environment, which I gotta say is an odd environment that we're in right here. And this is what's kind of nice about using an automated system to do everything, because it's not going to overthink it. I tend to overthink things, and I tend to think the market or a stock is going to do one thing or another, and then you get these like surprises out of the blue where the market does the opposite of what you think it might do, or you get like some crazy price action like this just out of the blue. But and so there's something to be said for trading mechanically and just following a mechanical system like this. So, and of course, obviously, it's not out of the question that you're going to pick and choose which of these trades that you take. And of course, that's, completely expected, really, because when a whole bunch of trades all trigger in, my tendency is to say, okay, well, instead of just buying all of them, let's figure out which ones have the most well-behaved chart pattern and which ones look the best. And so, yeah, and this one's really interesting. This is the last one on the list here. This thing's been open since February 11th, and at the bottom of this list was ExxonMobil, which is up like 30%, and so the system itself, and you guys have heard me say this before, it basically is programmed to abide by the old rule. Cut your losers quickly and let your winners run, right? And so stock like this that basically has been sort of running, and this is probably the best example of the magic of the programming that goes into the trailing stops that you'll ever see. Because this trailing stop right here at 209, or maybe it's the luck of the draw, but this trailing stop at 209, started off over here, right? It started off, you can see the initial stop there, triggered in over here, and the initial stop on this particular one was down here at the bottom of the pattern. And as the stock started pulling away from the trigger here, at first, there was a small stair step there of the initial stop, trailed up, and then somewhere over here in this area, maybe it was this day, maybe it would have been this day where it kind of pulled away from the trigger a little bit more. Trailing stop came up to 209 here, and then basically it through all of this, it just sort of hung right there for whatever reason, and and you'll notice I had it extended, and so basically what happened was this trailing stop just stuck there at 209, and it was able to withstand normal price fluctuation, normal volatility, which is what I always talk about, how the trailing stop's designed to withstand normal price fluctuation and not knock us out. But like I say, it could totally be the luck of the draw, because that low right there was 209.22 and the trailing stop was at 209. So I mean, within 25 cents, actually 22 cents of the trailing stop, and the low this day too, 209.40. So it came really, really close, but it didn't tag it, and so that was, that was sort of the retracement after the trend change. A lot of times you'll see like the trend change, and then you'll still get another little pullback there, and then a continuation. And so, as you can see, it managed to tag the target, and so far so good. And so the idea is, take half off the target. The reason you don't want to sell it all at the target is because the real money, the big winners end up like this. They hit the target and then they go on to make, a much greater move. And so that's really the, I mean, unless there's a reason, with the zero commissions nowadays, you guys know that scaling in, scaling out, no big deal. And so the basic premise of the system is that you look to take half off at the target and then let the other half run with the trailing stop, right? And so over the course of 100 trades, it's going to work out pretty well. So that's how it works. But anyway, so there you go. I think I'll just wrap it up here since about 40 minutes in. And so there you go. We took a look through all the open trades, and some of the ones that have only been open for a couple of days or a few days, you have to reserve judgment. And it's just like this one. We looked at this a couple of times when it was really close to hitting that stop, and in the back of my mind, I thought, oh, this one's going to get stopped out for sure, right? But yet it didn't, and it went on to actually hit the target, which, is a respectable gain from 212. Actually, the fill here was 213 and change, up to 235, and as it stands right now, it's hanging on pretty well. And of course, the funny thing about this is that this one re-triggered in because we had the same thing over here, and then look at that. You remember that back in the beginning of January, that one day, and there you go. There's the there's the best visual of why you don't want to necessarily sell it all at the target, is because this day it hit the target and then faded back down, and of course at the end of that day we're thinking, oh man, should have just taken it off at the target, sold all over the target, because that's a reversal candle. If I pulled up a candlestick, you'd be like, oh, that's a spinning top, or not a spinning top, but a doji that's like marks the reverse. And then the next day, look at that, the next couple of days, that's where the bulk of the move came in, just out of the blue, right? So anyway, that prior trade there is why is just a good visual example of why, selling half at the target, because it could have easily reversed and just faded back down or whatever. And then, if you didn't sell any at the target, then you're thinking, a period of time can go by. Like this thing could retrench and spend the next, week or two fading back down. So, but that's the way that everything was designed, was take half off at the target, let the other half run with the trailing stop, and occasionally you'll latch on to, an amazing run. Now, of course, here's the other thing on this. Obviously, it didn't hang around up at the highs long enough for the trailing stop to get that much further, but that's where the and I'm not going to get into all that now, but that's where the parabolic stop would have probably kicked in up here. And so there's a bit of discretion that you can use if you want to. But other ones like the ExxonMobil, basically that stop is going to tighten up, tighten up, tighten up. This was the parabolic stop on ExxonMobil, and so you see you got to run sort of above that too, and the trailing stop actually tightened up. So anyhow, so that's that. And today being Fed day is going to be a crazy day. Take a quick look back. Yeah, Q's gap down, and so far they've rallied, but everything's just looking like it's kind of in limbo here. Real choppy morning session so far for the S&P. So choppy. Kind of a narrow range choppy. So we'll see what Jay Powell has to say, and we'll see what the reaction to it is. And I will see you guys back here next week, same time, same place. Thanks for tuning in.